competition here. We reported here at Bloomberg this morning that Morgan Stanley is planning on bringing crypto to E-Trade. They're even looking for partners to gain scale there. How are you positioning for increased competition in this space? We know you've never been shy to shy away from rivalry like that.
Yeah, I mean, I'll tell you that we're moving ahead. I think that what we aim to offer at Robinhood is the best combination of value and user experience for crypto trading. We've been at it for a while, so we're excited to see the market share continue. And we've got a lot of things coming down the pike as well. So we have a crypto event that's happening in France in a couple of months, where we're going to be unveiling some new innovative products. We also have the acquisition of Bitstamp, which, as you know, is the longest continuously running crypto exchange, which makes Robinhood, once that acquisition completes, the longest continually running crypto exchange. That also opens up institutional business. So, you know, we see an opportunity to not just compete for retail, but also to partner with other institutions that are looking to get into crypto down the road.
I wonder what other expansions you'd make into currencies. I think you can trade options on currencies, right, or futures, but not direct Forex. Is that the case on Robinhood right now?
Yeah, right now you can get exposure to currencies, traditional currencies, using various means. Most recently, you mentioned futures on currencies, which have been a popular product. You know, I mentioned earlier 4.5 million futures contracts traded in April, more than all of Q1, and futures as a product's only a few months old. So we think that that's going to continue to make progress as more and more of our customer base discovers this asset class. But yeah, there's futures on currencies, on crypto, on commodities, and broad-based indices like the S&P and the Dow.
You know, we had the weakest April for the dollar ever, and I'm trying to gauge how foreign investors view U.S. markets, or even how U.S. investors are executing the Sell America trade. And I know that you now offer trading to UK clients, right? They can trade U.S. stocks and contracts here in the U.S. Have you seen any shift away from U.S. assets?
Well, what I'll tell you in the UK, and by the way, we're continuing to make a lot of progress there. That product offering keeps getting better and better. We recently launched options trading for UK customers as well. And what we're seeing there is behavior that's actually very similar to the US. In particular, what retail gets excited about is U.S. companies that are at the frontier of innovation. So think electric vehicle companies, artificial intelligence, cryptocurrencies are very interesting globally as well as we continue to advance there. So I think the retail customer base continues to be very, very interested in being at the frontier of innovation, particularly our customers. And over the long run, I think that's going to be a durable trend.
So worst month for the dollar since 2022, I believe. Vlad, I want to talk about the month that was overall and what it meant for Robinhood, because we were joking about how quiet April was because the S&P 500 ended only about 0.8% lower, but we know there was a lot of intra-month volatility. One of your competitors, Schwab, just said that they posted their 2 busiest days ever in the past month. How active were traders on Robinhood over the past month or so?
Yeah, April's continued to be incredibly strong across the board. I talked about futures already, but you know, equities and options are at or near multi-year highs, and net deposits has continued to be remarkably strong. We talked about 18 billion in net deposits in Q1, which was an all-time record. April has continued that. So people are continuing to deposit in April. So yeah, you're seeing at Robinhood customers continuing to put more and more of their assets onto the platform. We're continuing to grow, and we're also diversifying the business with the end goal of being the place where you can buy, sell, or hold any financial asset or conduct any financial transaction. And, you know, it's not just trading. We had a gold event, the Lost City of Gold in San Francisco about a month ago, where we launched a digital advice product. AI features were announced, Robinhood Cortex. We also announced Robinhood Banking, which will help customers, particularly at the high end of the market, engage in banking services.
Vlad,
So
there's another service
plenty more coming
that you have said you're now going to be offering in further scale, prediction markets, and it's pretty controversial on this set. I am a sports bettor. Matt does also correctly often point out it is an addictive tendency for
Dangerous,
many as
Shonali.
well, can be very dangerous. We keep my inclinations in check here. But Vlad, what are your projections for the potential of the sports prediction markets in particular for Robinhood?
Yeah, so it's been live for about 6 months, prediction markets as a whole for Robinhood. And right now, we announced over 1 billion contracts traded. So I'd say first 6 months exceeded our expectations. It's a nascent asset class, so we didn't exactly know what customer demand would look like before we offered it. But we offered the presidential election, March Madness. We have a wide range of economic indicators, including consumer price index, and federal funds rate and other things. Price of gas, we have a prediction market on that. And we've been adding more and more sports, including NBA playoffs and NHL playoffs and Masters. So it's been growing. We announced that it's right around 20 million annual revenue run rate in the earnings call, and we think that can continue to grow. I think that prediction markets aren't just interesting as an asset for traders, but over the long run, prediction markets are the future of news. Customers, retail and institutional alike, are in need of more accurate news and information in real time. I think prediction markets provide that as a societal benefit in addition to utility for traders. So we're excited to lean in there, and we know it's early, but we think there's vast potential in the asset class.
All right, well, I know it's early for you on the West Coast, Vlad, so we really appreciate you getting up and joining us on Open Interest. I hope we see you in New York soon. Vlad Tenev there, the CEO of Robinhood. Obviously, this kind of volatility provides a tremendous amount of activity for that trading platform. Coming up next, we're going to talk LPGA with Mizuho. Mizuho USA ramping up its investment in women's sports, and we're going to discuss their latest deal with the LPGA Tour with Jerry Rizzieri from Mizuho Securities USA.
All right, let's take a quick check on markets before we do that, because you have the S&P 500 pretty close to session highs right now, building that momentum for an 8th straight day. If that holds, that will be the longest winning streak since about August. We know that a big reason why we're rallying today is because of what we heard from Microsoft and Meta last night. You can see that in the NASDAQ 100 higher by about 1.9%. Some more big earnings tests after the bell today, and the 10-year Treasury yield higher by about 5 basis points. Let's take a quick look under the hood too, because it's not just about big tech when it comes to earnings. You have GM slashing its guidance, saying tariffs will cause as much as a $5 billion hit. Shares higher a little bit though. Roblox also higher after daily active users jumped 26%, and McDonald's sales fell sharply with consumer anxiety keeping diners away. You can see traders offloading the stock right now. This is Open Interest.
And it's time now for the Wall Street Beat. Mizuho is reaffirming its investment in women's sports. The firm just signed a 5-year renewal with the LPGA Tour and raised its purse to $3.25 million in 2026. Joining us now with more, Jerry Rosari, President and CEO of Mizuho Securities USA. A lot of interesting things going on in the business, but first let's talk about golf. I do love golf, so do a lot of our viewers.
You were on your high school golf team, right?
I was on my high school golf team, but obviously this is a whole other level at a time where women's sports is a very big area for investment and viewership. What is your commitment to this?
Well, first of all, I love how you can pivot from high finance to women's golf. It's amazing. Obviously, there's a great opportunity for sponsors just given the increase in interest in women's sports. Actually, our involvement came a little earlier, actually, kind of maybe even before the Caitlin Clark effect. Our inspiration really was from the LPGA players themselves. We host a corporate event every year at Baltusrol. And in 2022, I was speaking with Nelly Korda, who had joined our event. She had just returned from winning the gold medal at the Tokyo Olympics, and I was struck by the contrast in her experience as one of the top players in the world versus the men's experience on the PGA Tour, just in terms of the venues, the overall player experience, obviously the purses, all those types of things. So when we were thinking about brand sponsorship a couple months later and thinking where we wanted to invest, we wanted to do more than put a logo on a hat of a PGA pro. So we thought we'd focus on women. We focused on the LPGA. We connected with the commissioner of the LPGA and shared our vision of what we wanted to do, something in New York City, super high-end, a great experience for the women, but also our employees and our clients. So that started the whole process, and we engaged with Liberty National, which has been a great experience, and also shared our vision of what we wanted to do. So now we've got this great event where we have a super high purse, one of the top purses on the LPGA Tour. We have a unique format where we have the amateurs playing alongside the professionals, and it's a one-of-a-kind event. And we provide a great experience for the players, including not just a top purse, but great food. We pay for their hotels. I think 7 or 8 other sponsors are now doing the same thing. I think we maybe led the charge there. So, and we're basically all in women's sports. This is like what we're doing.
Well, talk to us a little bit about the ROI. This is something I always wonder about when I see sponsorships at big sporting events. I go to a lot of high-profile track and field meets, for example, and I always wonder, what do you get out of it? How do you measure the success of such a large-scale marketing campaign?
Right. Well, we think the return on investment is very, very high for women's golf. And here, look, we're in the media center of the world, financial center of the world. Our clients are here, so we get great participation from our clients. The employee experience is great, so it's great for employee morale. It sort of aligns with our values as a company. So there's the financial aspect of it, and we do think it's worthwhile in terms of the increased business we get from our clients. But it also is more of a purpose-driven event for us as well. So we get, I think, a lot from our employees in terms of feeling great to be associated with a firm that is sponsoring women.
I just want to take a second here for some breaking news. Excuse me for a moment. It looks like Jennifer Jacobs is reporting that National Security Advisor Mike Waltz will leave the Trump administration. So CBS News is saying that Mike Waltz and his deputy as well will leave their posts at the White House. This, according CBS, is citing sources that they're not naming. So clearly, Mike Waltz came under a lot of scrutiny, along with Pete Hegseth and others, when he talked openly about an attack on Houthi rebels in a Signal chat. The Atlantic's Jeffrey Goldberg breaking that story, and a lot of people have been waiting for heads to roll on that, and it looks like, at least according to CBS News, that Mike Waltz is going to be the one to take the fall on this. So I think something that we're going to continue to get news on here. We're going to continue to get details, and we're going to bring you more of those. But Jerry, to get back to you and Mizuho, I think this is an interesting piece of news to come across, because ever since the purchase of Greenhill, you've been pursuing a U.S. expansion. And I wonder how having a foreign name has affected you, especially in this much more xenophobic climate.
Well, I would say that it hasn't really impacted our business at all. I mean, we operate more like a U.S. firm here. So we have a great Japanese parent. It's 65,000 people globally, $2 trillion of assets. One of the largest banks in the world, close to 40 countries. But in terms of the operations here, our competition really is the U.S. banks. So we haven't really felt that type of an impact. In fact, our business has been growing rather considerably. We're about 30% of Mizuho Financial Group's profits here in the Americas. We're about 4,000 employees. I know you had Mahal Katz on recently talking about our banking business. So our platform is growing, and we haven't seen any pushback at all. In fact, we're gaining from some of the retreat we've seen over the years, particularly from some of the European banks.
And the numbers do show it. According to Bloomberg's data, in corporate bond underwriting alone in the U.S., you've risen to the 7th place. Now, what's the ambition? Can you break into the top 5? I mean, are there areas that you think you can surpass even the U.S. banks?
Yeah, so investment grade debt, we've been in the top 10 for the last 8 or 9 years. So that's been one of the core components of our business. Where we've really been expanding has been in equities, fixed income, derivatives. We have a very robust financial sponsor business. You're aware that we bought Greenhill about 18 months ago. That's been going very well. So we had a gap in our portfolio. I'll call it advisory. Advisory is about 10 to 15% of the fee pool in the U.S. So that was a big hole for us to fill, and now we've kind of filled that hole. And Greenhill's great because and they're integrated into our platform. They're global, so we have 5 offices in Europe. We're in Australia. We're in Canada, U.S. So it's really a global addition to our platform.
All right, Jerry, that's a nice place to leave it. Great to spend some time with you. That is Jerry Rizzieri of Mizuho. Now, we do want to get back to that breaking news that we brought you a couple of minutes ago. This, according to reporting from CBS, that National Security Advisor Mike Waltz and his deputy, Alex Wong, will be leaving their posts in the Trump White House. This is according to multiple sources familiar with their departure, telling CBS News. We'll bring you more details next. This is Open Interest.
Let's get back now to that breaking news. CBS reporting that National Security Advisor Mike Waltz will leave the White House. He will leave his post, as well as one of his assistants. Here with us now is Kaylee Lyons. Kaylee, what do we know?
Well, Bloomberg has not confirmed this yet, but Matt, CBS is reporting that, yes, Mike Waltz will be leaving his post as National Security Advisor, as well as his deputy, Alex Wong, leaving a question as to who exactly might be able to replace Mike Waltz, keeping in mind that this is not a Senate-confirmed position. So the president would, in theory, have the ability to quickly appoint someone to serve in his stead very quickly without having to go through any kind of congressional approval process. But this comes after, in recent months, Mike Waltz has been under incredible pressure publicly for his inadvertent addition of the editor of The Atlantic, Jeff Goldberg, to a Signal chat in which attack plans on Houthi rebels were discussed in the Middle East. There was much uproar over that, especially on the Democratic side, about breaches in security protocol and operating outside the traditional bounds of intelligence sharing, and many were calling for his resignation at that time. It seemed that story had quieted down some. Right. A lot of attention instead has shifted to Pete Hegseth, so this is a bit of a surprise. But again, CBS is reporting that the National Security Advisor, Mike Waltz, will be leaving that post.
Yeah, we'll continue to follow the fallout there. Our thanks to Bloomberg's Kaylee Lyons. Let's get a quick check on markets here. We know it's still a big earnings day, and you have the S&P 500 actually extending gains right now, Matt, up 1.4%.
Yeah, tomorrow, by the way, it's Jobs Day. So today was huge. Tomorrow could be even bigger. Rick Reeder joins us from BlackRock, David Kelly of JP Morgan Asset Management, and the CEO of Duolingo.
From the heart of where innovation, money, and power collide, in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York, this is Bloomberg Technology. Coming up, Microsoft surges on the back of strong quarterly sales and profit growth despite economic uncertainty.
Plus, Meta also jumping on the company's ad sales, allaying investor fears about the impact of tariffs.
And Apple takes an epic blow from a federal judge on its App Store sales commissions as the tech giant gears up for its own earnings later today. But first, we check in on these markets, which are in risk-on mode. We're up more than 2% on the Nasdaq 100, best day in all of a week at the moment, as we see those earnings news flow into the risk sentiment. We're seeing Bitcoin also up 2.4%. Interesting news that Morgan Stanley's E-Trade might be offering Bitcoin and more broadly crypto to its retail investor base. That's a big one. But Ed, dive underneath the hood. What's going on in the micro?
Yeah, big technology earnings performance, and Meta's the place to start, right? This is a big gain, and the story really simple. Outlook of the core business for the current period strong, raising the guidance for the range on capital expenditures, commitment to advanced compute access across the company, but there is a nuance there that also the higher cost of doing business because of tariffs is having an impact. Great discussion ahead. And then Microsoft, wow, look at the gain, 33% top line growth on Azure cloud, also discussion about the commitment to spend on data center, but there is some evidence that all of the prior investment is now materializing in the spend on their cloud business. Let's get some more on Microsoft's results. Ted Mortensen, Managing Director at Baird. 33% top-line Azure growth is 4% beyond what the street said. But within that, there's a 16% contribution from AI. Those, to many, are just numbers, but they do seem to be evidence that the investment to date is now starting to translate to top-line gain.
You nailed it, and thanks for having me. The bottom line, if you look at that, that's actually 35% in constant currency. And what Amy Hood alluded to is most of that upside is just the Global 2000 migrating to cloud. And right now on Azure, they can't even keep up with demand on Gen AI. That guide of 34 to 35% was way above the street.
Let's talk about unable to satisfy current demand. There's an interesting, is it caution coming from Microsoft that, look, they're willing to be underserving in terms of supply because they are starting to normalize their spend in terms of capital expenditure?
I think they're trying their best to provision a lot of this next generation equipment, specifically NVIDIA GPUs. There is just so much demand. If you even look at some of the metrics that OpenAI put out last week of having a run rate of 174 billion in revenues, the demand is just outstripping supply, plain and simple. And their provisioning of new data centers with this next generation Gen AI stack infrastructure is just, they just can't keep up with demand, and that's a very good problem to have.
Yeah, so can we strip away that noise? We had note after note, analysis after analysis that in some way Microsoft was curtailing data centers, whether it be through leases or renegotiation. Is that happening, or is this the ebb and flow of doing business, Ted?
I think on the call, they tried to get to the root cause of this misinformation. I think you got a lot from the sell side that fiscal 26 CapEx will moderate. It can't go at the same level at 24, 25 when they were building long-term assets. And they define long-term assets as data centers with a shelf life of about 15 years. Those are shells. And the other shells that they're building, you know, they have to be hooked up to utilities. And I think the big thing that the street was kind of missing is time to power. They are somewhat restricted on these next generation data centers on just getting the power capacity needed to fuel the Gen AI load. So fiscal 26 will moderate. It's normal. It can't grow at 50% plus forever. And I think where the street maybe got it wrong was some of the analysts on the REIT side that were picking up some weakness. And, you know, quite frankly, that's a good data check, but probably not put in the right context if you understand core technology and what's happening in Gen AI and agentic AI.
Ted, my relationship with Microsoft is I grew up learning how to use a computer on their operating system. And more recently, I'm a gamer. Two pieces of news out today. One, Xbox prices going up, because not just on the hardware, by the way, on the titles themselves because of tariffs. But I always go to the Bloomberg terminal and look at the split of cloud and just like software revenues. They're still quite good at selling software that you can otherwise get for free somewhere else. Is that fair?
That's fair, and I think you look at Microsoft, and they have a huge advantage as well as Oracle in relationship to the other cloud titans, whether it be Meta, Google, or Amazon. They already have the enterprise customer. So when you control the enterprise customer to begin with from previous revisions of whether it be Excel, Word, Outlook. And now, you have a CEO, Satya Nadella, which is a visionary in tech that should be at the top of the list of CEOs that actually get the migration to Gen AI. Now you can leverage that entire base through Gen AI. And what's different on Microsoft that I think they brought this up on previous calls is Microsoft has a Gen AI stack that they've created over the last multiple years that's it's written once, it's unbelievably scalable. And when you leverage apps on top of that, you've got a model that few can touch.
Okay, let me jump in real quick. While this is all happening, Microsoft's a big contributor. The Nasdaq's now pushing to 2%. The S&P 500 is pushing higher. A big part of that, I know Microsoft's not sort of where it was at the open, but it was on track for its biggest gain since 2020. And I think that for all the sort of negative sentiment around the world about cloud computing and tariffs, it's a pretty astonishing moment in time in the earnings context, isn't it?
Yeah, and I think therein lies what's phenomenal about this guidance, Ted, is the fact that we got it. And what is it that we're starting to see? Is it that companies, despite macroeconomic headwinds, just see the shift, whether it be to on-prem to the cloud, whether it's movement from non-Gen AI to Gen AI, it's just so mission critical that they have to stick with Microsoft right now?
That's the right question. I mean, there's two aspects. All the Global 2000 has to migrate to cloud to lower cost, and that's what you do in a recessionary or a decreased growth environment. More importantly, what Microsoft said on their call last night was a little bit eye-opening on the guide of Azure being up 34 to 35% next quarter.
Yeah, growth.
And they're bringing the cost down on these models 2x, and their tokens, the Gen AI agent tokens, are off almost 50%. So the street had this huge debate on ROIC, return on invested capital. Well, Microsoft's reducing costs of Gen AI for broad adoption, and if you're in the S&P 500, if you're not migrating to Gen AI, you put your whole model at risk from an operating margin perspective.
Ted Mortensen, Baird Managing Director. Fantastic to have your voice today. Thank you. Let's just shift to Meta now, because shares are also jumping following really resilient ad sales in the face of tariffs. Take a listen.
We've had a strong start to the year. Our community keeps growing with more than 3.4 billion people now using at least one of our apps each day. Our business is also performing very well, and I think we're well positioned to navigate the macroeconomic uncertainty.
Mark Zuckerberg talking about the ability to navigate. Let's get up to Evercore ISI Senior Managing Director Mark Mahaney now. And I pick up where Ted left us. The return on invested capital. Is this bearing dividends? Is the integration of generative AI throughout the ad offering vindicating that spending that actually they up for this year because of tariff costs?
Well, Caroline, I'll give you a couple of points on this. One, I think Meta is proving to show that at the app layer, the application layer, that you can get a good ROAI, return on AI spend. I thought the way Zuckerberg laid out the earnings call last night, the 5 areas of focus for AI for the company, and then the returns they're getting kind of within each areas of those focus. And they're applying AI to improve their ads platform. Well, the application of AI has allowed conversion rates to rise about 5%, which is a big number for an ad platform that's that huge. On the user side, they're trying to improve engagement. They're trying to make the content more personalized, more relevant. Well, they were able to show that the application of AI has led to a 7%, 6% increase in time spent on both Instagram and on Facebook. So yeah, I think they're proving that they can use AI to improve the service and actually monetize it. Like you can get a return on all that AI spend. I want to be careful though. I think extrapolating from Meta to other companies is a tricky thing to do. One, very few companies companies have spent as much money and as effectively as Meta has. And then Meta's advertising platform is just more resilient. I'm not at all sure that these companies are out of the weeds or out of the or out of the danger zone when it comes to the impact of tariffs.
Their argument, right, is that the time spent metrics are evidence of the resiliency in like tough economic environment. I felt like this story evolved over the course of this statement hitting to the end of the call, and this is the quote from Susan Lee on why. So the capex range gets raised, and we're all thinking commitment to AI, even though they said it goes to the core business. Then Susan gets asked about tariffs, and this is the answer. The higher cost we expect to incur for infrastructure hardware this year really comes from suppliers who source from countries around the world, goes on to explain uncertainty relating to trade negotiations. We're working on mitigations. The capex range got raised because it's more expensive for them to build the data centers, Mark.
Ed, you nailed it. I think that's absolutely true. I mean,
I'm nailing it all day today. Keep going, Mark. Thank you.
I think there are two reasons. One is that I think they are getting more aggressive, offensive. They've seen the return that they're getting on their AI spend, and they're leaning into it more. The second reason, however, is that costs are rising. And I don't know if you noticed this, Ed, but she was very careful never to use the T word, i.e. tariffs.
Didn't use
that's
it.
A political... Yeah, it's a political statement these days, and nobody wants to get involved in politics. So, so she was very careful about how she answered that. But yes, the costs of tariffs are a tax. They're inflationary, and if you're buying a lot of infrastructure hardware, like Meta clearly is, and so are the other hyperscalers, by the way, your costs are going up. So my guess is that Amazon may have to raise its capex, and Google's going to come back to us and having to raise its capex, and Microsoft next year will probably have to raise its capex numbers because the infrastructure costs are rising.
Look, Susan Lee was employee number 40 at Meta. She's a CFO, but she gets the business. And what she was explaining was that the compute needs are across the business. In other words, we're not just doing this for the training of a frontier model. They've got people in marketing. They've got people on the ad development business that are demanding for access to the compute. Do you have conviction that Susan Lee is getting that right in the numbers that she gave you last night?
Yeah, I think so. Well, look, we've had 3 years now of really aggressive deployment of AI to boost the ads business, to boost the platform for advertisers and for users, but also to roll out some new things like Meta AI and then Meta AI devices, maybe Ray-Ban, Meta Ray-Bans, maybe, and also to boost the WhatsApp business. And so I think they've shown that they can get a good return on this. I mean, they're good cutthroat capitalists like a couple of these other companies, and I think they're making rational business decisions. They're probably leaning a little bit more heavily than other companies, but it's paying off for them. I think you'll see other companies look at what Meta has done, and I think they're going to lean into AI as well. I know we kind of drifted away from the AI revolution earlier this year. I think we're going to come back to it. I think Meta's going to give us good reasons to do that.
Yeah, they're bringing out Meta AI app as a standalone. We've seen also the levers being pulled in terms of advertising when it comes to threads. How does that filter into WhatsApp and other offerings more broadly, Mark? But you said you can't read across from Meta into perhaps other social media companies like Snap, because Meta ends up being like the port of safety in that respect. But read across to Amazon in terms of cloud. And indeed, you say that Amazon might have to raise their spending on infrastructure spending in that respect, but where else does AWS take us in terms of growth?
Well, I just think if the infrastructure hardware is more expensive for Meta, it's more expensive for everybody, and so that's going to be the case with Amazon too. I think they may well have. I mean, I think the direction of AWS capex is going to go up unless but things could change quickly in this tariff environment. But for now, those hardware costs are going higher, and so that's going to probably be reflected in rising capex spending. And then just a point on Meta. I think their model is more resilient. Also, we haven't really seen the dramatic economic dislocation. Now, our checks indicated that you started to see some ad verticals really soften in the month of April. We still have the whole year ahead of us, so I don't think Meta's out of the woods. My only point is that relative to almost every other ad platform, they're more insulated, they're more resilient than anybody else. But even if there's a sharp economic downturn, they're not going to be immune to it.
And Mark, it's the Chinese retailers that pull back on ad spending. What about Amazon's e-commerce business?
I think that's going to be TBD. I think the March quarter is going to be fine. Google gave us a fine March quarter. Meta just did, and I think Amazon will too. We haven't seen any sharp fall off yet in consumer spend, but prices are rising. They're going to be rising materially. Those dolls are going to be more expensive on Amazon, and so exactly how Amazon handles that, whether they're going to eat margins or defend market share. And my guess is that, knowing Amazon, they're going to defend their market share, so they're going to be willing to take a hit to margins. So that could be a downside to the stock. So it depends. Prices are rising on Amazon. That's not a good thing for the Amazon ecosystem.
Mark Mahaney, Evercore ISI, Senior Managing Director. Good to have you back on the show. Thank you very much.
Thanks.
Now, coming up, Qualcomm becomes the latest chip maker to offer a cautious sales outlook in the face of trade uncertainty. We'll have more on the company's earnings next. This is Bloomberg Technology. Breaking news that's moving markets. Bloomberg reporting the US is weighing a potential easing of restriction on Nvidia sales to the United Arab Emirates. That's according to sources who say President Trump could announce the start of work on a bilateral chip deal during his upcoming trip to the Gulf. Nothing has been decided officially, according to our sources. They emphasize that the debate over chip trade rules for the UAE and other countries remains ongoing in Washington, but the stock spiking on that report to a session high of 5%. Competition for Nvidia closer to home. Investors are going to be paying close attention to Amazon's AI business when the company releases its earnings later today. A key part of its AI growth strategy is Trainium, the company's custom-designed chip. I got a tour of the AWS facility where they're made and designed. Have a look at this.
This is AWS Annapurna Labs in Austin, Texas. Amazon does all of its custom AI chip design in the US, and most of it happens here. Amazon bought Annapurna 10 years ago. Today, the team designs and tests custom hardware and software that power AWS data centers worldwide. We looked at Trainium, Amazon's AI chip for training and inference. Annapurna doesn't just design the chip, they oversee computer, electrical, mechanical, thermal, and software engineering for the entire server. AWS sales reps focus a lot on price for performance to win business for the chip. So today, Trainium 2 delivers up to 4x the performance of Gen 1. That required reducing component count, improving power, cooling, and networking across the server. In Austin, there's a quiet lab for chip validation, testing from the wafer level to boards. Then there's the noisy room, where full servers are stress tested. Trainium's still in its infancy, but it helps reduce Amazon's reliance on AI chip leader NVIDIA. It could also give AWS more control of its own destiny in the market that NVIDIA dominates. Next up is Trainium 2 at scale. Project Rainier, built with Anthropic, will run hundreds of thousands of these chips, and that project goes live this year.
Let's stick with chips. And in fact, the worst performer on the NASDAQ 100 is Qualcomm. This after the biggest maker of chips for smartphones gave a soft revenue prediction for the current quarter amid concerns that, look, tariffs could hurt demand. For more, let's bring in Bloomberg's Ian King. I feel for Cristiano and Qualcomm because they beat on the previous quarter, but it really is that sort of middling guide.
Yeah, no, you're absolutely right. The guide at the top end wasn't bad, right? I mean, it's really, all they've done is say what everybody else said, which is, hey, we had a really good quarter. Things are going okay for us. Look, we're doing better than even what we said. But, you know, maybe we're not so sure about what's going forward, and these things are beyond our control. Everybody else said the same thing, but they're getting beaten up a lot harder.
Ian, very quickly, Qualcomm, Android in China, what was the story?
Yeah, I mean, this is really important. This is a massive market for them. So in a way, they're a test case. Like more than 40% of their business comes from China.
Right.
They said it went well.
Well, we keep an eye on China and the business there. Bloomberg's Ian King keeping it short for us as well. We love it. Meanwhile, Roblox reporting earnings before the bell. A larger than expected jump in active users for the first quarter, benefiting from efforts that really to attract new players and keep as they grow older and using the service longer. Shares you see up 4%. Bloomberg Intelligence senior analyst Mandeep Singh is here with us. And this is a company that is managing to steer us for growth again in spite of macro uncertainty. They've got the users there.
Yeah, I mean, I think Roblox is a defensive name like a Netflix is, where people still need entertainment. And, you know, in this case, they cater to the younger demographic, the 13-year-olds. And look,
but now
older as well, and they have that native content. So when you think about, you know, why TikTok did so well, because they had the creators. Gaming creators are on Roblox. This is the platform where they curate the content, and in this case, they have a very successful model in terms of payouts that they give to those creators. So it's all user-generated content. They don't have to spend a lot in terms of getting branded content and, you know, paying content costs. And look, it's a very small company when it comes to the hours spent on the platforms, 80 billion plus hours annually. Compare that to Netflix, 100 billion around, and they monetize very less compared to all the other platforms that are out there. So from that perspective, I would say there is so much room to monetize the hours spent on Roblox. I mean, it's still a $5 billion revenue run rate company at the end of the day.
Through advertising and licensing, Bloomberg Intelligence senior analyst Mandeep Singh, thank you very much. Now coming up, Tesla's chair says it is not looking to replace Elon Musk as CEO. We'll discuss next. This is Bloomberg Technology.
Let's check in on the shares of Tesla because, well, the chair, Robin Denholm, has been denying reports from the Wall Street Journal that allege the company was looking to replace Elon Musk as its CEO. We're currently up 1.7%. A strong denial. Is there smoke without fire, though, Ed?
Yeah, that is the critical question. All you need to do is go to Tesla's regulatory filings, Form 10K, and they spell it out very clearly, this idea about key man risk. Every single regulatory filing has that Elon Musk, they are highly dependent on his services. They acknowledge that he spends time at all these other companies. I know that succession planning is always in the background of the Tesla board,
and it's
right?
the role of corporate governance.
Exactly. I think what's interesting is I continue to hear that Elon Musk also plans to spend a lot more time on XAI, right? That's a really big project for him, a priority because he wants it to be competitive against OpenAI for obvious historical reasons and Anthropic. But this is a clear denial by Tesla posted on X to the official Tesla account, citing the chair of the report that the board was looking to find a replacement, not clear if succession or a reaction to the state of this year.
I mean, but don't you think it'd be a failure of corporate governance if at some point they weren't thinking who on earth could, if forced to, lead a business such as Tesla?
What people forget is that beyond Elon Musk, there are many other generals of the company running the place day to day, and the company is still the leader in many of the fields it's in.
He's a good delegator.
Right.
Meanwhile, coming up, look, a federal judge ruled that Apple violated a court order by not opening up the App Store to third-party payment options. What this all means for the tech giant. That's next. This is Bloomberg Technology. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New
And
York.
I'm Ed Ludlow right next to you. Let's talk about some of the biggest movers in markets, and it continues to be Microsoft, actually, from a sort of points perspective and percentage perspective. The story's simple. Top-line growth on its cloud unit of 33% beyond what the street saw, but evidence that all that spending on AI development is translating into sales, and that is a pretty clear image on your screen. Away from kind of the earnings context, there is also litigation and antitrust consideration in two other names, right? We are, of course, talking about Alphabet, the parent of Google and Apple. We're going to get into detail on those stories, but I think interesting that Apple basically flat. We acknowledge that it's treading water probably ahead of earnings after the bell cow, but Alphabet, I don't know. I don't draw a causal link. There's some buoyancy there.
Buoyancy, maybe it's the meta numbers and what that feeds into advertising resiliency. But we also, of course, got a very strong pushback from Pichai, of course, the leader of Alphabet and Google, against any sort of de facto breakup of the company as we consider remedies to what is deemed a monopoly place within search. Leah Nyland's here to break it all down. In court, finally, Sundar Pichai getting up there and saying, look, any of these remedies, whether it's sharing our data or whether it's actually spinning off Chrome, you're breaking us apart and it's too much.
Yes, so he took the stand yesterday in the Justice Department's trial. This is the 3-week trial that's supposed to determine what the remedy is for Google's illegal online monopoly in search. The Justice Department has proposed, as you mentioned, that Google be required to spin off the Chrome browser, and also that it be required to share a lot of the data that it collects about users and the web with rivals. And Sundar Pichai pushed back on that remedy in particular pretty hard. He said, you know, that, while not an actual breakup, would be a de facto breakup of the company because it would allow all of their rivals to effectively reverse engineer their technology and use all of the sort of things that Google has built up over the past several years to gain its sort of share in search.
Leah, I said that Apple stock was flat because it's treading water ahead of the market close when it does earnings. Maybe there's downward pressure from a critical court decision. A federal judge ruled that Apple violated court orders by not opening up the App Store to third parties. You've been tracking that story as well. What are the need-to-know details about it?
Yeah, so this goes back to the long-running litigation between Apple and Epic Games, the maker of Fortnite, which sued the company back in 2020 over its App Store. And even though it lost most of the counts in that case, the judge did find that Apple's App Store violated California state law against over antitrust and ordered Apple to make some changes to its App Store policies, in particular allowing developers to link out, i.e. make it easier for users to buy digital goods and services on their own websites as opposed to within Apple's ecosystem. Apple didn't really love this, introduced some new policies in January of last year that it was still going to charge a 27% commission on things that people purchased outside of the App Store if they took advantage of these links. Well, Epic complained. The judge held a series of hearings both last year and this year, and found that the changes that Apple made were deliberately anti-competitive. Yeah. She said, in a very blistering opinion that was released late last evening, she said, you know, every single time Apple had a choice, it chose the most anti-competitive option. And on top of that, she found that some of the executives who testified at the hearing lied on the stand, and she recommended that the federal government open a investigation into whether they should be held liable for criminal contempt of court.
I mean, on fire was Gonzalez Rogers saying that if they thought that this court would tolerate such insubordination, it was a gross miscalculation. Apple comes back, though, Leah, and says, we strongly disagree with this decision and we're going to appeal it. So what next?
Yes, so Apple is going to appeal. She said in her decision that Apple needed to make immediate changes. They are likely going to try and appeal that to the Ninth Circuit to put that on hold, at least through the appeals in this. We'll see if the Ninth Circuit agrees, because they have already reviewed this case one time and found earlier that her decision, you know, was solid. So they could put this on hold while Apple appeals. If they do, you know, it's going to go through the appeal process, and we will not probably have a decision until sometime mid to early next year. Or they could say, you know, this should have gone into effect last year, and so they could let it go into effect while Apple appeals.
Bloomberg's Leah Nyland out of DC. Thank you very much. Let's get more on Apple, but specifically what investors expect from its earnings report later today. Let's bring in Carolina Milanesi. She's the president and principal analyst at Creative Strategies. Bloomberg's Mark Gurman, who, let's just be honest, is probably the leading correspondent and journalist covering Apple in the world, says don't look back at the quarter gone or the numbers. It's really about the long term and what Apple communicates on how it adjusts supply chains in the face of trade policy presently. What is your thesis on that?
I agree with Mark. It's really about what Apple is able to do from a manufacturing perspective, a supply chain perspective, to make sure that they're not so subjected to whatever the administration decides to do on the tariff side. We know that they are planning to shift their production to India as far as iPhones that are coming to the US, but that doesn't happen overnight. So anything that they're able to disclose, and obviously Apple always keeps their card very close to their chest on things like this, but the street needs reassurance that they have a plan. And it's the same for AI, actually.
Apple is historically the master of the bottom line, right? Profit and margins, irrespective of what's happening around the world. But it's likely, I think you and I discussed this the last time you were on the show, India long-term flying handsets out of that nation into the United States, it all costs money moving something from place A to place B. How do you see them explaining their ability to protect themselves from those costs?
There's a couple of things. One is that this is Tim Cook's bread and butter. He is an operational guy. He has been entrenched in supply chain organization for a very long time. He's also a very good diplomat. So I think that while moving supply chain and production to India is one of the core things that they can do, is also very good at dealing with politics, whether it is at home or in China. So I think these are the other things that we'll see happening. But we also have to remember that Apple is becoming more dependent on revenue coming from services. And so we might see some give from a price perspective on the actual phones and other devices, thinking that they can recoup some of that from the services side.
Now, he might be a good diplomat, but many might feel that potentially they have dropped the ball from an AI perspective, Carolina. And I got one note land in my inbox coming over from Linked Equities, which think that Apple is struggling to stay relevant. Is that too much of an assumption to be making right now because of Siri and the lackluster rollout of Gen AI?
Look, at the end of the day, I think that what people are picking up is the fact that Apple made promises from an AI perspective and they're not delivering quite yet. That's a reality. What is a reality as well is that consumers are still not going into a store asking for something that is AI driven. And they're still very much focused on hardware when they're looking specifically at smartphones. So there is some grace when it comes to the opportunity that Apple has, but it's interesting to see the excitement around the statement that Pichai made yesterday or the day before around Gemini getting to Apple before the end of the year.
Yes, so that cross-pollination. Look, maybe that's AI winning out for Apple longer term. They don't always do it first, but my goodness, they end up doing it best in the longer term, Carolina. Do people have the bandwidth to hold on to that view?
I think so. I think that there's going to be two realities. One is the Apple and Siri and what Apple Intelligence itself is going to deliver to consumer is much more personal. But what people are really excited about now is the more general AI. Your point, Apple does usually come in later in the market with a solution that then pleases consumers because of the way that they package it together.
You're both making historic references to BlackBerry and the smartphone market, I think. What's the one area where Apple is indisputably king?
Oh, I think it's simplicity, to be honest with you. It's the fact that at the end of the day, when talking about packaging things together, that when they deliver it to consumer, the the simplicity they use to deliver that solution is what is enticing consumers to stay where they are. And the other one is obviously marketing.
They're good at that. We'll have to see how much they can dial up that services side of the equation throughout. Carolina Milanese, it's always great to have you, President and Principal Analyst at Creative Strategies. Coming up, Uncork Capital. It raises $300 million that it searches for the next big AI startup. We'll be speaking with a managing partner, Andy McLaughlin. That's next. This is Bloomberg Technology.